Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today, we're going to continue our basics of technical analysis. And specifically, we're going to delve into market action. But before we start, make sure to smash the like button, share, and subscribe so you help our channel grow. So, you know my drill. I like to define things first and then to see what their application is. So what is market action? Why is it so important? So market action, a textbook definition, is really just price movement and volume. Price movement means that there is price moving in the market, right? It's just not stagnant between a very steady and very small range. It's actually moving in a significant amount of range, okay? And volume means how many participants are moving that particular asset. And between the two, that is probably the most important precursor before entering the market. Now, many a time I get a call from a client or an email asking us, Fred, when do you enter the market? When do you exit the market? Show it to me on a chart. Now, before I got to show it to you on a chart, I first have to see what is the price fluctuation and what is the volume. Because if there's no movement in the market and there's no participants moving that particular thing in the market, then it's really just arbitrary, okay? You want to have both elements, okay? They both need to be there. You need to have price movement and you need to have volume. And that's the precursor before looking at the chart. It has to be there. Now, really what this is a measurement of pressure, just like this geyser, okay? At the beginning of a trade, what happens is that there's a stage where there's like the first people that enter the market that see that this particular thing is moving and it's moving in a direction, and that is when we want to enter the market. At the beginning stages of an accumulation to that particular asset, and then to see that fruit throughout the time. So it's like watching a stock grow over a long period of time, right? And you want to just get there at the beginning stages of it before it takes off, right? Because after it takes off, it's too late. But you want to be there at those specific moments, right before it just shoots up. And as it shoots up, so you can essentially catch the wave up, okay? Now, this is so important for trading, and to just keep an eye on what is keeping in the volume and what is the price action any particular day. Now, when I first started trading, one of the regiments that they had me do is periodically throughout the day, okay, every hour, to actually take a measurement of the volume from hour to hour. Now, in the first half hour of the market opening, that's usually when most of the volume happens throughout the day. And then it subsides around by 10:30, 11 o'clock. It kind of like just subsides, right? And then if there's accumulation in the market, it'll subtly, still show some activity in the market. And then towards the end of the day, that's when we have activity again. Okay, so throughout the day, there is activity, but you have to pay attention to it, especially if something is accumulating or something is, an uptrend or something is in a downtrend. It's not just going to happen at one shot and that's it, right? It happens throughout the day. It's a developing story. Now, everything is related to the previous thing, but, okay, this is where it's really important. And this is where a chartist really looks to get that edge against everybody else in the market. And this is available. This is public information. It's that volume actually moves before price. When there is an accumulation to something, volume will start perking up at the early stages, and then the price will catch up as it's going higher. Or conversely, okay, when something is at its top, it's at its apex, and it's starting to go down, the volume will actually start going down first, and then the price. So this is really a very key indicator that gives you like a precursor to the actual what's happening in the market beforehand. And this is where, tied in with tiering system, where you tier in, where you build your trade, right? At that accumulation, at that point where it's topping out or it's bottoming out, and you see the volume start either perking up and you see things starting to go higher, then that is the point where you start accumulating small particular positions in that particular asset in the anticipation it's going to continue, and then you get more aggressive. And that is the first stages of trading the financial markets. Thank you for sharing. Thank you for participating in our presentation today. We'll see you here next week on Technical Tuesdays.